And we're live. Good morning, traders. It's Ivan Delgado, your host and market stats commentator at Global Prime Forex. Another Tuesday with you all. Remember that we run these events Tuesdays and Thursdays at 6 GMT ahead of the Frankfurt Open. Today we have a spectacular show ahead of us. We got Sarid Harper. He is a full-time trader on supply and demand, and at the same time, he's the owner of pipnotic.com. It's going to be a great show. We're going to be discussing different trade ideas. We're going to be touching on this concept, this methodology that he uses about supply and demand. We really want to mix up a little bit of theory and practice so that we keep it actionable, we keep it insightful, we keep it relevant for you all, okay? If you have any question, remember that you can type in the chat box, and all or the majority at least of the links that we're going to be discussing are going to be provided in the description box, okay? So without further ado, let's move into the live scene. And before that, a little bit of a shameful promotion. Remember that this show wouldn't be possible unless we have the sponsorship of Global Prime. Global Prime is should be, in an ideal scenario, your broker of choice. He is there for you. He has you covered, tight spreads, competitive swaps. You've got great fast execution, and on top of that, an excellent customer service. Okay, so if you want to then do more due diligence, you can obviously come to the forexpeacearmy.com website. And I have to say that it is really mind-boggling. It is very difficult that after 250 plus reviews, Global Prime still remains the top broker in terms of reviews, 4.7 stars out of 5 stars. And whenever you have that much quantity of reviews, it is really, really difficult to have this consistency in the number of reviews. Also remember that you can find us in Discord room. We have the link at the description box. And today's guest is Sarid Harper, and his website is pipnotic.com. Now, if you wonder who is Sarid, and before he takes the stage, I would just say that there's this Bali connection. Both of us are here based in the island of Gods in Bali, and I met Sarid quite recently, and we immediately hit it off. And Sarid's software to identify areas of supply and demand is personally helping me a lot with my efficiency in trading the markets, as it does most of the heavy lifting for me. Now, as I said, if you wonder who is Sarid Harper, he's the owner of this website right in front of you, and is a website that makes price action tools and utilities that focus on the real reason price is moving, and that is liquidity. Okay, he has, in my consideration, a top tool that is the supply and demand indicator. And that allows to visually see what's driving price and where the markets are buying and selling, where they're stepping in. He's a former computer scientist. He specialized in offensive computer security, and he's originally from England, although lived the last, I believe, the majority of the last two decades in Denmark, and he's now based in Bali. So, Sarid, welcome to the Forex Daily Edge show. How are you doing?
I'm good. Can you hear me?
Excellent. And by the way, I want to make sure that everybody can hear Sarid loud and clear. So if you don't mind typing in the chat box that you can hear Sarid, so that we can then guarantee the highest quality possible in this broadcast. If you don't mind, Alessio or Matt, who else is there?
Can you hear me?
Yeah, Paul, Elijah. Do you mind, guys, just typing?
Nice.
Loud and clear, Batman, clear, perfect. Okay, now, right off the bat, I want to say that we have the maximum number of attendees, 23 and rising, so that's a good start. Thanks for attending. Sarid, anything else you'd like to start with in terms of just giving a little bit of a shameful promotion of yourself, a little bit of background information? Take the floor.
Yeah, well, I got into currency trading via a work project I performed whilst doing security assessments of some banking software. And so I spent maybe the close part of the past 20 years working for banks, doing security assessments of different pieces of software, including the trading software. So I spent a lot of my time on the trading floor, kind of with one eyeball on the software, but eventually both eyeballs were staring at these traders' charts. And this is where I got kind of a sidetracked, which brought me into the trading arena. So no regrets.
Excellent. Now, do you mind sharing with the audience that experience that you had once upon a time when you were working in offensive computer security, and then you were actually dealing with a project? I believe the project was called Libra and was actually utilized by a bank. Is that something that you can share?
Yes, of course. I can't say the name of the bank because they'll
No
go over
problem.
my head.
But I believe that was very insightful for you. That was kind of like a reckoning moment, right?
It was.
Yeah.
It was. Libra was it was a liquidity distribution engine that was running in the banks, and so this big bank, they would have a bunch of orders on their books, and the guy who became a close friend told me, yeah, this is Libra, and Libra is a piece of software that deals with the small trades. I said, well, what's a small trade? And he said, well, everything under 2 million euros. I was like, oh my goodness. So that was very interesting, and he showed me exactly what it did, and it essentially took all of these orders that were in the pipeline, and it sliced them up into small pieces, and it got them filled as price into this window, this price window, and if price remained within this price window for an extended period of time, more orders got filled, the price moved in and then left, and the orders would remain there until price came to it at a later date. So this was one of those aha experiences for me, for sure. And I know that Libra is still being used to this day.
Perfect. Now, do you mind sharing with you our your charts? So I can bring the Skype window. There you go. Perfect. Excellent. Okay. And just do you mind just place that Skype window outside the main screen? Perfect. Okay. Now, what about if we start by analyzing the current situation in the markets from your Discord room? I got these. Let me see if it loads up. Because yesterday in the Discord room, you just posted a few trade ideas. Something to ponder. And do you have that list? I'm just trying to load it up. And
I do. I've got it here in here, kind of underneath here. I put this in here, and these are all set to expire within a certain period of time. But these are based on an analysis of everything. So I analyze everything that I have here. I'm not trading cryptos through MT4, but everything else. And then I kind of put these in, and some are close to price, and some are weeks away from price, and I leave them in there. I'm pretty exposed, as you can see here, but each trade is risking 0.25%, so I'm only risking a few percent if all my stops get hit simultaneously. So there's no big deal at all. But I like to have these in there, and I'm watching the charts every morning when I wake up, and I'm redoing this analysis every morning. And so I'll drag these onto the chart every morning, and I'll look for my areas of supply and demand that I find attractive. Let me kill my WhatsApp. And then I either leave the orders in if they're still valid, or I remove them and put entries based on where price currently is.
What's your routine like from the moment that you wake up in the morning? What is it like for you to go? Is it like do you have some protocols that you follow very methodically as your religion, and say like do you exercise and then you have your cup of tea and then you go through the charts? What is it like for the audience to get exposed to that information?
Yeah, well, after I drop off my kids to school, which is 10 minutes away, then I come home and I open my computer, and then I start kind of see if any of my trades have been filled. If they have, then I want to focus on what price is doing. Are we in profit? Are we in drawdown? What's going on? What happened? If I am in a trade, then I normally will have a look at Bloomberg currencies and see if there's anything that's going to affect my position. So if some big news event happened while I was in bed, the result of my order being filled, well, then I want to know if that's going to affect my expectation of the outcome of my trade. So I'll do that. That takes normally no more than 10 minutes. And then I start running through the pairs, and I'll analyze everything, and I'll normally pull out maybe 20 trades. Well, I end up with about 20 trades, all of which are risking 0.25% per trade. And then it brings me, this takes about an hour. And then after that, then I'll normally do a bit of software developing. And I normally just pull up like the Pitmodic supply and demand software and just like look for bugs, look to optimize the code. And then I normally do a bit of exercise, which is normally my laps in the pool, have a bath, come back, and then I see if anything's been filled. Otherwise, I go back to my software programming, which I really enjoy. And then it's kind of maybe lunchtime, and then normally maybe grab a bite to eat at about 1 o'clock, and then slowly start to wind down. I suppose.
Mm-hmm.
Yeah.
Okay. Got the list of the trading the currency pairs, the G8 FX space, and this is what you posted the other day. So you highlighted here dollar Swiss, euro dollar, dollar Japanese yen, a few trades that you're pondering either on the H4 or the daily. Do you mind going through perhaps a few of the charts that might have caught most of your attention as the week starts to unfold? Which one either you got feel already or you're looking to enter and the price seems to be kind of like hovering near your entry price? Just walk us a little bit through what's on your radar.
Well, we have, I know the Euro Aussie is close to being filled. Where's the Euro Aussie? I think we're getting close to it, just here. And the reason I think this is interesting is due to this was a double-edged sword, because when I put this order on, price didn't create this below price, and so price came down and we rallied, we accumulated and we rallied, and now we're kind of poking higher. The entry is lining up nicely with this trend line, and so this is fine. If you're looking on the 4-hour chart, I like this pattern. You can see that we have the origin of this move here. Mm-hmm. We have the high, we have the low, prices retraced here. The beginning of the sell zone is the high of this candle here, and there's black space since the release, and so I just like this area. It's also trading in line with the interest rate differentials between the euro and the Australian dollar. So selling euros and buying Australian dollars. So if this trade were to get filled and then kind of sit around in this area of supply for a day or two or a week, it won't. But if it did, then I wouldn't be hemorrhaging swaps every day as I was waiting for this trade to mature and move. And sometimes this happens. Price will go to your entry and it'll just sit around. I had this. I had a trade on the was it the Hong Kong dollar and the American dollar, I think, the one where you have like they have the ceiling, and I sat on there for a while, and it sat on there for a long time, and I was like, come on, move, and it didn't move, and so I got out because it was too expensive, and then it dumped. So it's just nice to have the interest rates or swaps on your side so that you can have the patience kind of to wait out the storm until the liquidity has been distributed enough so that the pair starts moving, or the trade starts to work out.
Yeah. Have you been able to qualify what type of approach the price has at these levels of demand and supply? For example, as I break down the price approaching these areas of demand and supply, I do divide it, or I break it down into, it can be what I call a GIF bar, which is an upthrust bar, which is very elongated in nature, and then you have an immediate rejection out of that supply and demand area, and that would be to me the Goldilocks scenario. That is essentially the price just coming and really rebounding really hard as it comes to that level. So I would say that that's like ideal scenario. And then you have those moments, those instances when the price kind of approaches in a more compressive or in a more corrective manner, kind of creating that compression. That to me, I find it over time as I traded origins of supply and demand to be still quite acceptable. And the instances that I don't like quite much is what you just mentioned. Whenever we have acceptance or equilibrium being found just ahead of that area of demand or supply, and to make it worse, if ahead of that happening we have a fundamental high stake risk event, that then to me it's like I don't want to be exposed to that trade if I know that is like a central bank event or there is like a jobs employment which has the potential to move the market a certain amount of pips, because to me the edge that the supply or demand represents is no longer there, because for a certain period of time the market is going to be determined, the directional bias is going to be determined by that fundamental new release, and after that is out of the way, then you just reassess.
Right. I mean, if I'm completely honest, I don't pay attention to the news that much.
Okay.
Interest rates are definitely something that I'm aware of. I want to know if the Fed or the Royal Bank of Australia has something to say about monetary policy. But besides from that, I don't pay too much attention to the news. Yeah. Number one, I'm not an economist and I don't understand what these numbers mean. Number two, I need intraday volatility in order to get price to move to my entries, because I'm buying low and I'm selling high. So I need the news to drive price to where I have my entries.
Yep.
But obviously I'm not a fool if my entry is very close to price in the spot market and we have the Fed or jobless claims, I'm likely going to pull the trade.
Yeah.
And wait until the news is out, it's been absorbed, and then I'll kind of reevaluate and reposition myself according to the kind of the new sentiment.
Perfect. And by the way, the audience, if you guys want to type any market that Sarid, you would like Sarid to actually look into, just be my guest, do so, and he will be happy to do investigate that market. Now, Sarid, what's your view on the euro dollar? I believe that you have limit orders set up to both the upside and to the downside at a certain distance.
I just want to have a look at this very quickly, just to explain my thinking for this.
Perfect.
And so here on the Euro Aussie, we have a price level in here that was tested once, twice, 3 times. Okay, but price didn't go through. When price, I always mention this as a slingshot. The slingshot was pulled back to this price level here, and then this is where we found we were able to advertise a high price, high enough to attract some sellers and draw price through this previously respected area. Okay, so that tells me that a price level above this high here, which is the beginning of the sell zone, is an attractive price to sell, which is why my entry is there. So I'm not just putting these on because there's a pretty bar pattern. I'm doing this based on patterns like this, and also based on where we have the presence of buys and sell zones. But I need to see supply or demand being consumed by, for example, this area here. If I don't see that, then there's no way to evaluate the strength of a given move, because the forex market is decentralized. Broker A has volume information for their clients, broker B has volume information for their clients. So there's no kind of single go-to source to find accurate volume information like there is on centrally exchanged assets. And so you need to be able to see, or rather qualify the strength of a move. And this you can do by looking at where areas of opposing supply and demand are consumed.
That's right.
Okay, cool. Let's have a look at the Euro USD. So what do I have here? Yeah, my overall stance on this is, price is reacting at this weekly area of demand.
Yeah, something I noted as well. Yeah.
Yes. So we had price. We had also like a divergence here, where currency strength probably went high. We had price seeking liquidity, so moving, advertising cheap prices. On the second test, we saw a nice pull away, and then once price left, we were able to actually move through this area of supply, which is here. Okay, so price tested it once, and we know this is supply because we managed to close below some of these lows here, and we know also there was supply because price reacted there afterwards. So when it's tested once, we poked into this weekly demand, we accumulated for 1-2 periods, and then we had another accumulation candle here, which closed above these two, telling us that we have a continuation pattern between these two, and then we closed above this area of supply. So there's an interest for price to move higher, I'd say shorter to medium term.
Yeah. That's my view as well. I'm pretty bullish on the euro short term. Something that probably Elijah is not gonna agree with me, but yeah, I will elaborate on that scenario in a little while. Continue, please. Elaborate further on you.
Okay, and so where are my charts here? So I have. If you look at the daily chart, we have. Okay, we had. This is actually clear on the 4-hour chart. So we had this area of demand here. Okay, this was tested once, twice, 3 times, and it finally went out, it finally moved out. But the area that did it is this one here. Sorry, the price had to retrace to this area here. So price formed this little accumulation distribution candle, price went down, then the slingshot was pulled back into this supply, and then we left. Okay, so the beginning of the sell zone is the high of the deepest pullback since this area of demand was removed. Okay, and that gives us like a bit of a block here. We have from the highs of this pullback, the slingshot, until the bottom of this area of supply here. Okay, and the reason I have my entry here and not here is because these 2 red candles here, they represent a liquidity void telling us that we have thin liquidity between here and here. So the thick liquidity is here. We have a little bit of a liquidity here, thick liquidity, but between the two, it's thin liquidity. And so this tells me that price is going to have a tough time moving through here, which we're kind of seeing now. It's going to have an easy time moving through this, and then it's going to have a more difficult time moving through this, because this is value, this is value, this is not value, this is the space between. Okay, and so we have, in order to attract, draw people into the market to who are willing to commit their money to sell, we want to show them an area of value, and we have that up here. Okay, and also notice that we had price test this area 2 times.
And it looks like that area seems to be a parent. I mean, not sure if you need to go lower to other time frames, but it looks to me like that's a parent. Like that is the initiation of a sell-off without reacting prior to any other area.
Exactly, it is. This is established, independent
Correct
of any other area. And so we had something in here. This is micro demand in here, micro because you can't see it on this time frame, but it was tested once, twice. This area sat on it, and then when we cut through it very aggressively and forcefully. And so the area that removed this one is this one. Okay, so this is the one that I think that price will have a bounce at. And then you have to remember, but is it going to bounce there? And the answer is you don't care. You just have to, okay, the edge of this whole strategy is to be able to find these areas where we can see value being advertised on a price chart. If you trade enough of those and you ensure that you have, you're winning about the same as you're losing, maybe winning a little bit more, but your risk reward calculation is slightly in your favor, then you don't care about the individual trades. You just care about taking enough of them, applying your edge, and then just letting the whole probability model work itself out rather.
Yeah, and let's just touch on that component of trade management for a minute. As far as I'm concerned, your way of trading the markets is always going to be, you're going to use a stop loss size that is going to be, for the most part, for the majority of times, 2 times the size of that supply or demand area, correct? And then
that's right.
And then in terms of profit taking, I understand that is discretionary, but do you tend to pay attention to whatever opposing supply or demand in that same time frame you have, and that would be a fairly good indication of your take profit? Or how do you base that decision? I think that's very important for the audience to understand what is going to help you to determine your take profit target.
It wouldn't. Okay, so I mean, my stop loss is going to be placed a multiple of okay, if we have this area of supply here, this is 11 pips. This is tiny, okay?
Yeah.
And so I'm gonna want my stop loss to be above this slingshot. You can see the price went down, the slingshot was pulled up to here, and then it left. So I want to ensure that we have a completely kind of untouched liquidity above this area here. So this is where the beginning of the sell zone starts, and it goes higher. It doesn't stop here, it goes beyond this. And so I want to ensure that my stop loss is located in a place that will tell me that I was completely wrong about the trade. This isn't that, but this is 2 times the size of this area. Sometimes I want my stop loss to be placed in an area on the market where I know that if price goes there, then I certainly don't want to be in the trade. And that's not always easy to do, but I try to do that as much as I can. If I can't do that, like in this situation here, then I want to have it far enough away from this area of supply that I can kind of manage the trade into profit. So if price goes into here, and we start to move down, then I'm going to look at opposing areas of supply and demand, or in this case demand, to find out where I want to take my my profit. And we have some stuff forming below price now. What I don't want to see is I don't want to see price rally, sit just below my area, and move sideways. If this happens, then I will feel inclined to pull the trade off, because this is the market accumulating orders to challenge this area of supply.
How long do you wait approximately?
Yeah, that's a tough call.
Yeah.
I just wait. I can normally go on the very small time frames and watch as price starts to feed into this area of supply. And if price kind of pokes in and shows sharp rejection, then I'll feel a little bit better about it. But if price starts to kind of form kind of a flat upper price limit, a price level, and then the lows kind of start to increase, then I'll feel a little bit nervous. And then you get kind of like, I can't draw anything on, I can't, actually, maybe I just want to draw something here so you guys can see. I just got to turn off the trend line management. Enable, no, let's turn this off. So what I don't want to see is stuff like this. So I have like this is like the upper level here. I don't want to see kind of price. Do this, let me make this nice and fat so we can see it. And this one here too. I don't want to see stuff like this, like price come up here and start to kind of test this high level and then start to form these higher lows, because then we're kind of looking for a squeeze.
Yep.
And then when I see that, I say, okay, price is pushing, because we're starting to form micro areas of demand, because demand on the micro level is being respected.
Yep.
We are challenging this price, this pull liquidity here, and I'm afraid it'll just pop through, hit my stop, and then figure out what it's going to do. So when I see that happening, price go up and then kind of squeeze up, it start to squeeze to the upper corner, then I'm going to probably bail on the trade or reduce the risk and move my stop higher. This is also something that I'll do, so kind of move my stop above here.
And really, that plays into the view that at the end of the day, as a trader, you really need to become an independent thinker. And providing trade ideas and pondering those ideas among traders in chat rooms, that is only going to be a very small aspect of you becoming somehow consistent on your approach and eventually getting your P&L to a positive area in a consistent manner. It's always been my view that you need to become, first and foremost, as a trader, someone who is able to analyze the charts in a manner that is congruent, that resonates with you. And if you can be provided the tools, as you do with this supply and demand indicator, that obviously makes the whole efficiency much better, at least for me. I mean, you have a tendency to look at supply and demands. I also account for support and resistance areas, which in the majority of times, and that is something that you do outline, are going to be reactions to supply and demand levels. Not always going to be the case. And I always look at 100% measured moves, as the audience knows, and looking at different bits and pieces. But at the end of the day, one of the lessons to take home is that whatever style of trading you are adopting, it needs to be something that it resonates with you, from your experience, from your journey of learning lessons, of repeating mistakes, etc. But what you do provide here is definitely a very strong foundation to analyze and find entries in the price charts. That's for sure. Is there any?
Definitely.
Yeah. Is there any other market that you might want to go through? There's one. Actually, allow me just to share my screen for a second, okay? So that we can keep it a little bit dynamic, okay? So here I have the Euro US dollar on the weekly, on the daily, and on the 4 hour as well. If you want to actually look at what I'm explaining, so you essentially now, your Skype is not visible, so you can just switch the windows, no problem. Now, what I've noticed is the following, and again, this is going to portray this concept of becoming an independent thinker and having your own ideas and put them to work. So essentially what I've seen in the euro is the following. So where are we now? Yeah. So on the monthly chart, I've identified that we have what it's called an outside bullish candle. Now, I've gone through the instances ever since the global financial crisis right here in 2008, that we had either bearish or bullish outside candles. And to my observation, there have been 10 times. And out of these 10 times, 9 out of 10, it has led to a shift in flows for at least 2 or 3 months, the bare minimum. And other times it's gone for a run the whole year. So that starts my top-down analysis. Monthly chart, based on what I saw in October, makes me more bullish than bearish. Bearing in mind, I'm well aware that the Euro US dollar has a negative swap, something that probably Elijah is going to remind me right now in the chat. But that being said, let me just continue with the weekly chart. So on the weekly chart, what I see in here is the following. Let me just load up my There we have it. Okay, so on the weekly chart, as you pointed out, we are reacting to what appears to be a partially consumed area of demand here on the euro against the US dollar. So that tells me that the euro against the US dollar is now taken control by a demand area on the weekly. Okay, now that being said, I also observe, and let me grab here the pen, I also observe that we've had a break of structure. You notice that we had a swing low, and then here we have a higher high, okay? And now we seem to be rebounding out of a very important psychological level, and that is the 1.10. Now, if I continue building a story, building the chronicles of the euro-dollar market, and something that I will do by just having my own personal observations, then I will show you on the real quick here on the daily what I'm seeing. So that was the weekly. Now let's move into the daily. So on the daily, essentially what I see, and I need to load the template, so allow me 1 second. I have this very cool tool indicator, which I just told you about. So essentially, you just wait 5 seconds and your template gets copied to the rest of the open chart. So pretty cool, because I'm going to be drawing also 100% measure moves, etc. Okay, so the daily, it's here. Now, I like the fact that the euro, based on the picture I've built of the monthly, which is it's a bullish outside candle, it's starting to rebound once again from the area that I would expect to do so, which is at least, you know, the 50 to 60% retracement, the 1.10. So I like what I'm seeing. I like that it's rebounding out of a demand area on the weekly. I like all that. And as I build the picture lower, it is not, my view is not being cancelled, okay? It is not being negated, okay? So as I come into the 4 hour, this is what I observe, and this is where my pending order to go long is. So essentially, what we've seen is that the euro now continues to go higher on what looks like a one-way street ever since we started the week. And I've identified an area of demand right here below. Now, I like that departure was really impulsive in nature, and what I've done is I've placed my limit order right there, and also I asked myself, how much of a backing do I have if price starts to going against me in this area? And I can notice that below this area, I also have a demand area being built. It's already seen a departure of about 80 pips as opposed to the area of 20 pips, so 4 to 1. And it kind of like resonates with this top-down analysis that I've built. My stop is down there, and I would be expecting a take profit at the bare minimum of 1.11. So that would be a risk reward of about 35 and 2 to 1, about 2 to 1. I like what I'm seeing, and it is very congruent, you know, from a top-down analysis. The moment that I see weekly or daily actually not being in alignment with the 4 hour, I'm a little bit more concerned about putting on a trade. It's not going to cancel that. There's going to be discretion playing into this view. But yeah, that's my view. I also going to obviously assess risk events. So if we have ECB and the price is somewhere around that area, just like, you know, accepting around that area, and we have the ECB, that to me is a trade that needs to be discarded until I make a reassessment of this market. Other than that, I've become much more flexible with the news, and especially with the euro. Other than a central bank, I'm just gonna let the price do its thing. Okay, so yeah, that's my view on the euro at this stage. Any other market you want to touch on? Let's look.
Let's see.
So you highlighted also a sell on the pound, on the dollar Swiss franc, a sell on the dollar Japanese yen. Yeah, your list was pretty long. A buy on the New Zealand US dollar.
Let's have a look at the Kiwi.
Yeah, I also noticed a very enticing short in the New Zealand US dollar. I'll walk you through later. What do you see in the Kiwi?
Can you see my charts?
Yeah.
Cool. So if we look here, we can see the price is kind of wriggling lower, but also notice that we're pretty low. We're pretty low, and we are, if I can't see here. So, okay, so we have the low here. Okay, this is interesting because we have, let me see, can I draw? How do I draw something? I don't know. It doesn't matter. So we have this low, we have the origin of this move, It started from here and it went up to here. Now we're retracing back to here. On the way up to here, we had the beginning of some sell zones. And we have the beginning of the sell zone for this entire move, and that's down here. And the way you find those is that you look for the move that moved away, and then you look for those pullbacks and then departures, pullbacks and departures. And when price came up to form this high, we had a couple of areas that are interesting, and they normally look like this, where you have a low, a low, a low, a low. And normally when price revisits these buy zones, it'll do so on the leg down. Okay, and so when price does this and starts to move higher and then starts to move down, we reacted off this supply, monthly supply, and now we've moved away and we formed this area of supply. So we have a parent and a child, and then price came up to the child. Now we're moving lower. It's dangerous to buy on this leg here, and it's better to look on this leg here for buying opportunities, because we have buying that went on in this leg, this move higher, and we have selling that went on this leg here. So as price starts to move down, the leg that moves down and retraces this move higher, we sell. But it's dangerous to buy anywhere on this leg here. So if you look at, for example, this, and you start to look to buy in here, managing buys on this leg, it's a lot more conservative or more aggressive stance when managing trades on this leg here. Okay, so I have a buy here, but I'm going to be managing this differently in comparison to, for example, buying down here or buying at the beginning of this buy zone just here. Okay, so if we have a look here on the weekly, notice that the beginning of the buy zone was here, and we know this because this is the cheapest price this market retraced to before it came back. And so what I'll normally do is I'll mark off the low, and this is where I'll expect price to bounce in the future. And so I will not buy for a price any more expensive than the deepest retracement since price came down like this, because we're standing on a move like this. Does that make sense?
Yeah, absolutely.
Cool. And so what you want to do is when price reacts to the beginning of a buy zone, like so, well, then you can start to look to buy on intraday level in this little price structure here. So if we have a look on the daily, and you can see here that we have additional buy zones and sell zones that have been established. And we can see here that price moved up, we moved down, we moved up, and then we move down. So we're forming this lower highs, lower lows concept. You can see here that we have an upward sloping trend line, which is telling us that we have the flows starting to move higher, which is a lot clearer on the 4-hour chart, because you can see these these blue boxes being formed below price, like so. We have a lot of departures moving higher here, and I like to focus on the strong moves up, and you can see that we have this very strong move just here. So price moved up, we came down, we formed a higher low, and then we had a really strong push away. There's a lot of buying going on in this place here. And so when I see price leave like this, I want to identify the beginning of the buy zone. The beginning of the buy zone was here, because this is where price retraced to, and it went up. And so this is the most expensive price I'd want to pay for the Kiwi American dollar. So price came down, so we went a little bit deeper. We had another push lower, and then this is where we left from. And so now the beginning of the buy zone goes lower. And so now we have this area here. This is the beginning of the buy zone. And here we have real demand. And so for me, I'd like to buy down here, because this is where we had a very nice departure. And additionally, as you mentioned earlier, we had support and resistance. We had this price point here that was tested once, twice. Then price rallied up to it. We accumulated, and then we cut through it. And so if we look at these two are linked together. So this was tested once, twice, and now this area of supply is removed by what? By this one here. So this is the one that's responsible for consuming that. So this is really important. And this is supply because we had this here, which was, we had this one here that was tested, price went deeper, and now this is gone. The area that did it is this one here. You could see that we had the slingshot was pulled back, and this is the move that moved through it. And so you focus on this little box here, and that pin, and that wick there, and you mark it off like that, because this tells you exactly where the area is that is responsible, where this pool liquidity responsible for removing this demand begins. And this is where it begins. See, now it's gone. See, price move through it. The origin of this move is here. And so this is where I'm looking to buy.
Yeah, it looks like your stop loss in this case is quite ample.
Yeah.
Yeah.
It is.
Why would you determine this stop in particular to be so ample in comparison to how you would approach an entry 2 times the stop loss size? Just because that area, it's quite tight in nature?
Yeah, I mean, looking at this, let me go to the 1 hour chart.
Yeah.
See, we have that. It looks like this.
Mm-hmm.
That price came up, we kind of gapped down, and then we went up. We accumulated, then we cut away.
Mm-hmm.
I just wanted price to be far away because, I mean, if price comes all the way down here,
mm-hmm.
or even moves beyond this,
mm-hmm.
then I don't want to be in that trade. Then I think it's going to go lower because, well, then it's going to, if it manages to move through here, then I think it's going to continue moving lower. But this is where the departure came from. We have quite a bit of trading in the area. You can see all the white candles clustered there.
Yep.
And so that area of demand, let me get this, there we are, is there's quite a lot of trading in that area there. So I want to give price a lot of room to breathe. So
mm-hmm.
I think the price would probably come through and move a little bit deeper into here. So ideally, I'd like price to kind of pull into here, kind of farm that black space that we have, and then I think price will manage to wriggle higher from there. But looking at this, we have price leaving, moving higher. We have a low, we're moving higher, and now price formed a low here, a lower low. So I'm thinking we'll probably move up into here and then wriggle down into this area and then depart north for the shorter term. So yeah, I mean, I'm just learning that I want to give my stops or my trades a lot more room so that they can work themselves out. Because normally, I mean, the vast majority of the trades work, and the ones I get stopped out on are the ones where I had a bit of an ambitious stop. I wanted my position size to be higher, so I reduced the size of my stop, which is essentially greed. So greed is the main reason that a lot of my trades lose, is because I'm trying to get too much volume in too small a pace, and I don't want to risk more than I've decided before the trade is opened. And so the way you can do that is to reduce the size of the stop, increase the volume, and that's when I get slapped. So this is just me trying to kind of embrace more air for my trades, more patience and less ego.
That's right. Okay, so here is just a brief, I'll give you a brief rest, just rest your voice. So I'm going to be walking the audience through my view on the New Zealand against the US dollar. And I've set a limit order to sell this pair higher up. So from a weekly perspective, what I actually see is that we had this very relevant level of support, got tested a couple of times, and then we broke through. And it looks like we've just come into very close contact to that level of weekly support, now turned resistance. Okay, so that's the picture that I see from a weekly time frame. Now, as I move lower into the daily, we want to pay attention, and just allow me 1 second. I think I missed something to explain to the audience. Let me see. So I got the take profit there. Yeah, so essentially, whenever I see this bracketed area, what I'm going to do on top of analyzing the supply and demand levels is also I want to understand where the 100% measure move is out of a bracketed area. And if we see a breakout of what looks like this range, this accumulation or distribution area, where is most likely price going to go before it finds a major concentration of liquidity. And I really, really like this area of potential liquidity in here. We have a supply that is the area where the sell-off initiated, that had a successful rotation to the downside. It also coincides with this 100% measure move. So that is an area that is still like more than about 300 pips away. So I can take it easy about, before placing my order, but it's something that has captured my attention for sure. Now going into lower time frames, if you check here on the daily, what I see essentially here on the daily is the following. So on the daily, price has been rebounding off this horizontal support area. It got tested multiple times, and now every single time we've come lower, we have seen a response out of this area. Okay, so that's my picture on the daily, which doesn't cancel my view to actually be bearish nor bullish, just because the price in the daily is on what appears to be a range. So what I'm going to be doing is I'm going to continue coming to lower time frames, and here's where it gets very interesting. And the reason it gets interesting is because if I were to run 100% measure move, and just reminding the audience that when I'm going to look to pinpoint these concentrations of liquidity, as much as I respect the incredible tool that is the supply and demand Pitnotic, I'm also going to be accounting for round numbers, support and resistance, and 100% measure moves. And if there's an area of confluence where they all align or the majority align, that will only reinforce the notion that that's an area that I want to potentially be trading. Okay. And what we see in the New Zealand against the US dollar is that if we see a break of this, and I'm gonna draw here, if we see a break of this bracketed area, this here, then we're gonna actually have 100% measure move right there. And right here, what you see in orange, that actually refers to the weekly resistance level that I was just showing you before. On top of that, we have what looks like a fresh and parent area of supply on the 4-hour highlighted right here. And then we also have a round number. So to me, that is an area that is very pristine and quite a premium, quite a discounted price to pay for the New Zealand against the US dollar. So that's what got my interest, and I placed a sell limit in there. So that's my view on the New Zealand US dollar. As long as there's not a conflict of views from higher time frames, then I'm quite flexible on trading both directions, as long as I can identify that there is a significant amount of confluence, or that the area is fresh and is not a retest, or is a child and the child didn't really accomplish a successful rotation. So yeah, that's my view in the New Zealand against the US dollar. I wanted to ask you also about the distinction between the parent and the child, and how do you actually consider a child to be valuable as opposed to a child that is just like an average area where you might just rule it out?
Well, that's a really good question.
Yeah.
I mean, a child. Okay, the reason I started using the term the parent and the child is because a parent is independently established, and a child is a reaction to a parent. It's kind of like with human beings. You know, you have like the parent, then you have the child. You know, like a child is there because of the presence of a parent. Okay, and so it's the same kind of thing applies here, and this is why I really like the terminology. And so if we have an area, let's see if we can find a nice one. Okay, this one here, for example. This is a child, okay, and this is reacting to this. And I know this is a child because it was established as a result of the existence of this. So this was established, price rallied, accumulated, rallied, we came back, we pulled back the slingshot, and then price went up. Does that mean that this wouldn't work? It doesn't, but it means that the major turning points are going to happen below this. Because the only reason the price was able to leave from here is because we fed into the parent. So if you look on, and this is where price came to in the future. Okay, it came here, and this is pointing to the beginning of the buy zone. Okay, and so this is where I want to reference. And so price came here, and it tested it a couple of times, and then it went north. Yeah. Okay, and the whole reason for differentiating between parents and children is so that you can focus on, okay, where do we have supply and demand, and where do we have direct reactions to supply and demand. This is demand, this is a reaction to it. So I'm not going to trade this, but I'm going to trade this.
So can you find as an example of a child, like, do you have something fresh in mind, a child that would be qualifying as an area that you would consider to trade? Or are you these days just simply fixated in just fresh areas in the vast majority of times?
I mean, you can trade children.
Yeah.
It sounds kind of strange to say that, but you can trade them, but at the same time you have to know, I think, why you would do so. And if we look at this just here, let me zoom in a little bit. So we have price. We formed this base. We rallied. We poked into it, and we left, and we came back down. So we had this area of demand, and it's a child because it's established as a result of what's going on down here. and that's fine, but essentially this little pullback here is telling me where the edge of the buy zone is, and so I would rather identify where the children are located in a price chart and chart the arrow, which is the low here, and buy here, than I would trade it, because value, this is just price departing, we're pulling a slingshot back, and this occurred as a result of being able to move back to this really advantageous price, which attracted buyers once again in the future. Then price sat on it, and then we moved through it. And here we have like a real mess, as you can see. So we have this, which is the parent. The software found it. Price tested it. Price tested this this child. So we have a parent child. We have a younger sibling, and there's a lot of trading going on here. And you'll find that I mean price is going to where are we? Yeah, price is going to easily move through this here, because when this is established, price came down here. We're pointing to the place where we should be selling, which is right there. That's exactly where we should be selling. Okay, and so there's not much of a distance between supply and the beginning of the sell zone. And so selling here at this area here, it would not be a good idea, because this is simply supply. This is a reaction to the supply in here. If you look into the future, I mean, price will almost always go deep into this child and go try and find the beginning of the zone. We didn't quite get to the entry. We got really close to it, and this is probably because there's a small micro area of supply located within this little price structure here, where price decided to react at. So price poked in, moved down, we formed this parent here, which the software found, and then we left, another parent, left, another parent, left, and then we have a bit of a mess. So we have a parent, and here we have the child. This is established, price left, we poked through it. And so this is just telling me here that, yeah, we have something that's interesting in there, but I would be really careful about trading at the lows of this. I'd be more inclined to go to the smaller time frames and do analysis. And you can see here that, I mean, has price been back to this area here? It has, here and here. And so this move here originated from here, which brings our attention to this. And so this is the beginning of the sell zone, so I'd want to sell from here and higher. Just it's a really good way to help you kind of identify real supply and demand and reactions to them on a chart.
That's right. Okay, so I'm gonna be asking you if you can provide your view on the pound US dollar.
Yeah, let me pound US dollar. Okay, so let's see. Well, we have this thing going on at the moment where there are a lot of delays with this whole disagreement, and so this is good for the pound because there's delay. That means that uncertainty is still unknown. So this is giving strength to the British pound. This is why it's moving higher, because no one knows how bad it can get because things are being delayed. Only when the deal is made, then we'll actually know how bad it really is. And so because we don't know, ignorance is bliss, optimism, and so price is wriggling higher from there. So this is why we're seeing price move north. And so short term, I'm looking to buy, but as soon as any kind of, okay, on this day, we'll know exactly what's going to happen because they're going to make a deal or a no deal or whatever, then I will probably stop trading the pound because it's frightening, I think, to see rather the potential insane volatility that this will introduce to the market will be so extreme that I will not trade the pound until everything has been sorted out. They figure out how crappy it'll be for the UK, and then people can then start to short the pound or buy the pound depending on the outcome of the whole deal. But shorter term, I think we could probably move up. Longer term, I have no idea, not trade it. So I'd only trade the pound American dollar shorter term because of the reasons I just explained. And so we have, you can see that price is just really wriggling north in a real hurry. We formed this area, this really nice area here. We rallied forcefully, we pulled back the slingshot, we rallied up into this kind of like messy area here. We poked into this decent area of supply, which the software found nicely for us. And this is what we're kind of contending with here. But you can see we're gapping higher still.
Yeah.
Okay, and so this is showing this is showing us that people are still keen on buying for at least for the shorter term, despite the interest rate swaps between the two currencies. So we have this one here. It's been tested, but if you look here, I mean, there's no supply. We have the only thing we have, which is some kind of interesting, is this, the 131.82, which has been tested a couple of times. And looking beyond that, I mean, there's no supply until this. And this is supply because we had this here, which was tested once, twice, and it's gone. This one is kind of the origin of the move. This is the supply that started this whole move. I'll be selling from here and higher, maybe, I don't know, 2 or 3 times, maybe 3 or 4 times the size of that because of volatility. But we also have this little area here, which is actually, this is the one that's responsible for removing this demand just here. So software found that nicely for us. And so, I mean, if you look at this, I mean, there's no reason to sell here. This isn't even supply. This is kind of, it's been tested once, twice. Price didn't really go into it, but notice that price has already been back to this price level here and all the way through here. And so if you consider where the beginning of the sell zone is, it's not till here. This is the beginning of the sell zone, which is way higher. So I think the prices continue to move higher unless fundamentally something changes. And so I'm keen to buy, continue to buy until we manage to get up here, and then I'll be looking to short really tiny positions very, very carefully, closing my positions off before the weekend.
Yeah. Belwolf is asking me, Sarit, do you consider stop hand manipulation when planning your trades?
Sorry, repeat that. Stop hunt manipulation.
Manipulation when planning your trades. Do you consider that?
No. Stop hunting is just the way the market releases liquidity into the market so that they can buy it up. And so I don't view stop hunting as something negative. It's just something that has to happen in order for the market to move. So if people have let me zoom in here. Let's say that we want to sell here. We have this high here. Let's say I want to sell somewhere here. We have our stop above here. I mean, everyone knows that there are loads of stops up here. So if I want to sell, but there's not enough liquidity in the market, I'm going to have to drive the price up here in order to release the liquidity into market so that I can sell it. Okay, and so I don't consider it too much because I don't feel that the market is out to get me. I don't feel that the market is set up so that I will lose, but I am convinced that the market does what it does in order to fill the orders of the big banks that are invested or looking to invest in the market. And so obvious places where stops would be, I mean, I want to know where they are. So I'll often ask myself, okay, where are people probably going to have their stops?
Yeah, I always ask myself that too. Yeah. Go ahead.
Then I'll say, okay, good. Then that's a really good place to take the opposite side of their position. So if their stop is there, then I'm going to want to buy up that liquidity because I know that's what the big banks are doing. They're pushing price below these price levels to hit the stops, to dump all the liquidity in the market, which makes it available. And then I want to be in the pipeline to buy some of that up in anticipation the price is going to move higher. So I don't consider it too much. I'm just aware of the fact that where stops are located in the market because you can use this information to your advantage.
Yep. Perfect. Okay. Let's see if there's any one question. That's for the banking entry. Okay. It doesn't look like how much time do you have before you need to wrap things up? Now it's.
I think we're good. My wife is picking up the boys today, so I have time.
Okay.
In about 15 minutes, then the
Perfect.
tornado will move in,
Yes.
and then the noise will start, I think.
Yeah. Okay. Me too. Okay. So let me just. I wanted to highlight this example to the audience. So this is the pound against the US dollar, and I'm also playing. I'm actually playing a short position on the shorter time frames, and I walk you through why is it. What's my rationale? Okay. So essentially here, what we see on the weekly, and let me just remove these round numbers because it's just very messy. There you go. So on the weekly, what I'm seeing is that again from from this chart that really captures a lot of data points, like 1 week worth of price action on every single candle, we've seen that the move actually, if you notice, 4 or 5 weeks ago, it actually came to a standstill. Like it stalled at the 100% projection level. So I just want to outline here once again the relevance of this projection alone. That's where market makers are going to be stepping in so that they can actually create enough selling pressure to potentially, be inducing a reversal in prices. You're also going to see profit taking place at these areas, and I also call it a premium area to consider shorts once price reaches this 100% measure move, because you're going to see that there's going to be reversal type traders that are going to engage in this position. So more often than not, there's some type of response. Okay, so that's the weekly picture. Now you also have to bear in mind that my analysis of market structure, if I grab a pen, you'll notice that we make lows. We didn't validate these lows just because we didn't have acceptance below. So to me, that constituted a range. So that's the area that was created out of it. And then we broke lower. Okay, so that's the latest bearish leg. It's been to the downside. It's been very successful. And now we are correcting higher. Now within this correction, there is a micro leg which has made a lower low, and now we've made a higher high. This higher high has reached, as I said, the 100% measure move, and here is where I'll be expecting some type of response. And remember that it has a lot of relevance just because I'm looking at the weekly. Now as we move lower, allow me just to first delete this painting, and we come to the daily. What I see is the following. On the daily, we had the latest leg was a successful rotation to the downside. We found just one single candle that found liquidity. The market then snapped it back up, but we did in the process, we did create an area of supply at the bottom, which has been partially consumed on that visit. And so my vision was in this trade that if I want to engage in short positions in the shorter term, I want to actually find a level that is going to be above this week, just because that has already been partially absorbed. So if I come to the lower time frames and I ask myself, is there enough, is there further confluence that could actually reinforce my view on the pound against the US dollar? What I notice is the following. We had this bracketed area, and this is a bracket area that you can identify by this upthrust handle, and then we had a lot of the noise being traded, and eventually we broke. So whenever that happens, then what I do is I'm going to draw 100% projection. So from this low point through the breakout point, then the 100% projection comes right there. Okay, so that's where I enter my short position, which again aligns with the 100% measure move on the weekly. It aligns with this daily supply area that got tested once. So I'm waiting for a break of these highs before I engage. And on top of that, I ask myself, is there any reason to think that there's going to be more concentration of liquidity? And I have the 1.30 psychological round number, which more often than not is going to attract interest from macro traders, from the big players out there. So that when combined, when all put together and thrown into the mix, I believe that there is a case to be made for a potential short-term reversal towards this area in the pound against the US dollar. And I'm playing a stop that is fairly ample. I think it's like 70 or 80 pips. So yeah, that's my view on the pound against the US dollar. Let's see if there's any other questions. Looks like they're just having a little bit of a combo with themselves. Okay, so you are also typing on the chat. I can see that. Perfect. All right. Any other chart? You guys want Sarid to check out any other markets? I think Elijah mentioned pound Aussie. Is that a market that has your attention there? The pound Aussie. I think you were looking at the daily supply area in the pound Aussie.
Yeah, let's have a look. Pound Aussies. Where are we?
And before that, like,
Yeah.
let's just get this out of the way. So Michael is asking me, do the banks communicate with each other to know when to collectively cost liquidity or not? Because I don't think a single bank can do that. Did you hear the question?
Yeah.
What's
Yeah.
my view is
And
that
also,
they no longer do that. And my view is that they chasing each other these days. They used to before the manipulation proofs and stuff like that. And also their bread and butter is our client order flow these days. It's not so much proprietary trading. But give your take. Go ahead.
yeah, I think that I think everyone in the margins, profit margins, are going down, and so I think people are becoming a little bit more desperate and a little bit more aggressive. So if they have insight as to what, like something that's going to happen based on, for example, an order that one of their clients has, I think they're certainly going to keep this information to themselves, and definitely not share it.
Yeah, I agree. Okay. What do you see here, Pound Aussie?
Okay, so the pound Aussie, let's have a look. Yeah, so we have this nice, let me remove these psychological numbers on this chart. Cool, so we have this weekly supply, right, price left very quickly now. We're kind of slowly kind of regaining territory, moving up into this area of supply. And so until we get up into here, I think we can certainly still keep buying.
Yep.
We have a little gap there, as you can see. So there's, price is going to keep going north for a little while. And so then also, if we focus on this, notice again that we have this move here is standing on this here. So we have the origin, we have price, the lowest price left from, so move from here to here, and we're retracing here. What does that mean? That means sell in here and buy in here. So price points, demand in here, you buy at, supply, you sell here. You don't sell supply here. This is dangerous. This is high probability, this is low probability. I hope that makes sense because that's super important. If not, I can make a video on it so you guys can have a look so I explain it in more detail. And so for the time being, on what we can see here, because this is the move that's moving up, so we're retracing the move down on the weekly, we want to be buying. We don't want to be selling in here because it's lower probability. And so looking at this, we need to find properly qualified areas of demand. You can see we've had a couple. We had this one here, which price tested once, twice, three times, and then price left. We have this one here. Price tested it, and now we're leaving. Now we're struggling to move above these highs, and this is the all-time high you can see here. So if price moves above here, then I think we're going to keep moving north until we move up into this area. So I think positioning ourselves long for the shorter term would be probably a pretty good idea. We have this area here, which I think is interesting, because this is kind of price reacting at this. Price rallied, we move sideways, and then we're moving higher. We have this one here as well, and we also have this one here, which I don't like, because price has traded a lot in that area. So when price moves sideways like this, liquidity is changing hands, and so liquidity is disappearing. And so the pancake, we have a plate of pancakes. Each time price comes down, the top pancake disappears, and so the plate of pancakes here is less. Sorry, it's very small or potentially diminished. So you either want to look higher or lower. So this is thin liquidity. The thicker liquidity is bleeding edge price and fresh demand, which we have here, or down here. Okay, so this is the thinner side of the market. So if we go to the hourly chart, we can find some fresh areas. We had this, which already happened. Just a nice departure from this area. As I mentioned, Steve, something about green candles. This is the green candle that I was talking about. These just show commitment and the move higher. And we had that here. Price already tested this, and now we're moving away. Okay, so this is formed, this little thin boxed rectangle formed, and our price is moving higher. Yeah, so I think it's going to continue to move higher, but I wouldn't want to buy yet. I'd want to wait for fresh demand to be formed. This is not fresh because it's been tested, but we do have some stuff that's below price. Looking at this on the 1 hour chart, it's not a very pretty area at all, so I will probably pull this once price starts to move down and into here. But what we could do is we could move and have a look at the leg down so we can identify some areas to sell.
but only in the leg that moved down here. Okay, so price is currently here, and notice here that we have a small wick. Let me make that clear. Here we have a wick here, and so here we have the beginning of a sell zone, which is about this price just here, the 193.55. And so I think that we'll probably start to have some bounces there. And then we have kind of the big rally. We had an extended period of accumulation and a big cutaway. And this is clear on the daily chart. What we have here, price jumped up, we moved sideways for a while, and then we left. Okay, so this could certainly attract some selling here. And this is the one that is responsible for moving this, which was tested. Now it's gone. Which area did it? This one did. And so, if you look at, if you remove that, if you look at this, okay, this candle, the body of this candle is not within the range of the previous. The body of this is in the range of the previous. So the entry would actually go like this for this. And I like this because this candle, the higher this candle is where the slingshot is pulled back to. So on a smaller time frame, this will resemble this. So price comes down. So this move down here resembles these three candles here. And then price moving back and then releasing will resemble this. So price moved down, we moved back, and then we left. And so we're probably going to have some activity around the top of this big candle here, I think. We're currently testing a kind of support becomes resistance just here. The thin liquidity in here, and then it starts to kind of meeten up a little bit when we move up here. And essentially we have this as well, which is nice, which I also like very much. Tested, price pullback, we tested the micro child, and then the roller coaster left. So that's what I think we have there on that time frame.
Yeah, I'm well aware that even though you might not necessarily trade nor go the big volumes of your trading into the lower time frames like the 1 hour, it is still very helpful to deconstruct the price analysis.
Yeah, because the details are in the wicks, and you can't see. All you can see on the daily chart is a wick. But that wick, there's a story being told. That's a power struggle. The wick. It's telling you, please go to a smaller time frame and look for those patterns that give clarity, that tell you. So instead of guessing, here we have a wick. You don't know what's going on in the wick. But when you go to the smaller time frames, the story unfolds, and you can actually see who is in charge during that wick.
What's your time frame threshold? The one that you no longer go lower from?
Sometimes I'll even go to the 1 minute.
Yeah.
If there's no clarity on the daily and then the 4 hour, and I'm trying to pinpoint the entry, then
so
I
you
keep
go all
going
the way
down.
to 1 minute. Okay, I see.
Yeah. But my entries are based on the big time frames, but I'll look to refine my entry on the smaller time frames.
Perfect. Okay, so we've gone for 1 hour and 15 minutes. I think that this is about time to wrap it up. I believe that we have answered all the questions. Steve Chua was asking me where he can get the pipnotic.com. If you don't mind, just go through a brief explanation, a brief walkthrough on how people can get their hands on your software, where they can find all these amazing tools, and we'll wrap it up with that. So.
Cool.
Yeah.
So if you go to the pipnotic.com website, if you go here and you go to shop, then you can see you can sign up for the software here. Most people use the monthly subscription because it's easier. Sometimes you want to try it for a month and they want to cancel, or some people are busy, so they do it for 2 months, then cancel, then sign up again. So this provides more flexibility, but you can do it in here, and it's really cheap. We provide an enormous amount of value. We have a really nice community. The tone is friendly. Everyone's there to help each other and to learn. And we just talk trading all day long, and it's just a really nice place to be.
So I'm just going to show the audience your Discord room. So essentially, I'm part of it. I've been a member for the last week or so. And you can guys see here, there's a lot of different sections: beginners, supply and demand section, trading psychology. He really touched it all. He even shares trades, not only himself, but also part of the members of the, those that experience advanced traders. You also have like, the members, more kind of like specific area where you got the rules, symposium requests, if you want to have any requests. And on top of that, something we haven't really touched today, but you also have managed to automate, right? This kind of strategy, this software, supply and demand.
Yeah.
Right.
Yeah, it's been when I started writing the supply and demand software, which was initially in a product called the Price Action Pro, which was kind of a huge suite of a bunch of different tools which were price action related. And I pulled the supply and demand engine out, and now it's pure supply and demand. And if I show you the software, like the configuration, there are a lot of parameters. There are tons of parameters in here, as you can see. And this can be 2.0, this can be 3, and this is like 0, and this is 1. This can be 0, 1, 2. And so, it gets pretty confusing. And so I wanted to help automate the process of identifying the optimal combination of parameters. And this was done, this tool was something that I used by myself, kind of just privately for a few years, and actually started writing it quite a long time ago, maybe as far as 4 or 5 years ago. And recently I wanted to see if it would actually be able to trade by itself, and if so, would it earn any money? And I have it running on several accounts, and one of them it's been running for about a year and a half, and it's up, and it's pretty much hands off, well, at least this configuration, but it's focusing on the weekly and the daily supply and demand, and it's pretty much a hands-off process. But when you go to the smaller time frames, then you can get into trouble, because on the smaller time frames it does require a bit of discretion, and so you have to be quite careful. If you have an enormous amount of energy and you are on the ball and you're babysitting everything, of course you can use it on the smaller time frames.
Yep.
But for everyone, I will recommend that they use discretionary tools to start off with until they understand how supply and demand works using the software.
Understand the principles, and always bear in mind that the higher the time frame, the more accuracy in the analysis that you're going to have. Just because, remember that at the end of the day, the Forex market, in my opinion, hopefully Sarid agrees, is a mechanism that is a transition mechanism from the impatient to the patient. By going into the higher time frames, even though you have to sit on your hands for a certain period of time, you're gonna have better clarity in how you can detect and pinpoint these pristine areas of supply and demand.
Yeah, just slows things down, and I think a lot of people gravitate to the shorter time frames because they want to experience a bit of action. They want kind of quick, instant payoffs. They want that Ferrari in the driveway like by next weekend.
And that's fine as long as they can just trade their own, marginal quantities as opposed to their normal quantities, if they go into lower time frames, and then gain experience. And then at some point, you really need to ask yourself, what's your type of profile as a trader? And something that nobody is ever going to be able to tell you other than yourself, through your own self-exploration, through your own self-journey as a trader. And something that at the end of the day I suggest, and this is an article that I wrote recently about my personal routines as a trader, try to make your trading fit into your lifestyle. Unless you really want to go from day one full-time trading and you leave absolutely everything behind, you have the resources, try to make it fit into your lifestyle. Otherwise, it's going to sooner or later is going to burn you out. That's at least my opinion. So
and a quick add-on. Some years ago, I was working as a IT security consultant, doing hacking into banks and stuff, and I thought I want to be a trader, a full-time trader. So I quit my job just after we just bought a new home in the middle of Copenhagen. It was super expensive, and so I decided to quit my job, which wasn't a really good idea, because I was dependent on the income that I would be able to generate as a trader. And how did it go? It went horrible. It went absolutely horrible. We almost lost our home. We almost went bankrupt. But it was beneficial because I was able to sit in front of the charts for 10 hours a day and study price as I was developing the software, as I was trying to earn money to pay for the mortgage. As I was trying to fill up our bank account, that was almost on zero at the end of every month. And so I really do not recommend that you do that, because it's a super stressful situation to be in. And also, trading is not about, I mean, the whole concept of full-time trading. I mean, I'm a full-time trader, but do I sit in front of the charts 10 hours a day? No, I don't. I really don't. I mean, you just have to. Yeah, it's about living or trying to embrace a lifestyle that is different. You're no longer selling your time. You are selling the quality of what you're able to produce, independent of the time that it takes to create that value. So full-time trading, it's boring. I don't want to sit and look at the charts all day long. I want to be doing stuff that I enjoy, like programming software or hanging out with my kids or having a coconut with Ivan. And so you have to make space for that. And I think introducing stress, like quitting your job so that you can trade full-time, will make you will do terrible things to your trading, and and like neuroassociative conditioning wise, it's going to do some bad things to your mind and make you fear trading. And so just go at it super easy. So ease into it. Try and get it to kind of mesh nicely with your job if you have a job, and just take it slow and don't stress about it, and don't worry what everyone else is doing. I really don't like when people share their results in the chat rooms, because it makes other people anxious, it makes other people greedy, it makes other people fearful. And so I'd rather have that everyone kept their trading results to themselves, but they shared the lessons that they have learned whilst trying to becoming a profitable trader. Because I mean, I have some guys in the room who are unbelievable short-term trader types, and I have others who are unbelievable position traders and swing traders. And I guarantee the swing traders have a much more relaxed lifestyle than the guys who are focusing on the 1 minute, 5 minute, 15-minute chart. And so, as Ivan said very clearly, I mean, you have to find out what kind of a mindset you have. If you have the energy to go at it like a pit bull and really kind of focus on the charts for X number of hours a day, well, then you can certainly embrace a smaller time frame. But if you are maybe like me and really kind of don't like the stress of the smaller time frames, then you can kind of just move up a couple of time frames, and it just totally makes things a lot more tranquil and loose, and kind of eases up your time a little bit, which I think is a gift.
Yeah, I couldn't have said it better. And with that concludes today's live show. I hope you guys have enjoyed the content that we've put together. If you have requests for these kind of shows to continue down the road, reach us to Discord, send us some private messages, and hopefully that will make the case for us to just continue doing this stuff. We want to first validate that we are providing value to you all. And remember that if you enjoy these shows, you should, I'm not forcing you, but you should, smash that like button, subscribe to the channel. Sarid also has a YouTube channel. Allow me just to show you the YouTube channel in a second. So I can just do it myself. So you come to YouTube. It's Sarid Harper, correct? Sarid Harper. And there you go. Sarid Harper. And you'll notice right there, you have a collection, a library of many hundreds of hours of supply and demand related content. Sarid does symposiums, puts together content, codes, softwares, does a lot of stuff, and that's where you can find it all. Okay, so without further ado, I think that's all from us. And Sarid, it's been a pleasure having you, and probably we should come back at some point sooner or later.
Sure.
Thank you all for joining, and I'll see you all on Thursday, 6 GMT. Cheers.
Thanks everybody.
Thank you. Bye-bye.